Gold was 253 in 1999, and today it's hovering right around it's above and below 2,500, mostly above, and that's a big psychological barrier, another even number. If a crisis hits now, you're going to see $10,000 gold easy. In fact, the more you study it, the more it seems absurd to be under $10,000 an ounce. There's so little of it compared to how many dollars exist. Gold was 253, and now it's over 2,500. That means the gold didn't change. The dollar fell by 90% in 24 years.
Right.
In the dynamic realm of global finance, Mike Maloney, founder of goldsilver.com and creator of the Hidden Secrets of Money series, provides an insightful analysis of the role of precious metals in maintaining economic stability. Maloney observes, gold was $253 in 1999, and today it's hovering around $2,500, highlighting a significant psychological barrier. He suggests, if a crisis hits now, you could easily see gold reach $10,000, a prediction increasingly gaining traction among financial analysts. Current market data supports Maloney's perspective. Gold is steady at $2,516 per ounce, marking a 22% increase this year and reaching a one-week high. Esteemed publications such as Barron's, The Wall Street Journal, and Business Insider align with Maloney's view, forecasting gold prices between $5,000 and $10,000 per ounce, driven by a weakening dollar and anticipated inflation. Maloney emphasizes that while fiat currencies have significantly depreciated compared to gold, reflecting a 90% drop in the dollar's value over 24 years, gold remains a highly sought-after haven during crises. However, he acknowledges that gold is not without its limitations. In contrast, fiat money is currency not backed by precious metals like gold, silver, or any tangible asset. Instead, it is designated as legal tender through government regulation and authorization. This distinction highlights gold's unique role as a hedge against the devaluation of fiat currencies. Maloney further explains that during crises, 98% of currency typically seeks the relative safety of treasuries, while the remaining 2% turns to gold, silver, or cryptocurrencies as alternative safe havens. This dynamic underscores the broader context of gold's role in a fluctuating economic environment. Before diving into this video, subscribe to our channel and hit the bell icon to stay updated. Share this video with anyone who might benefit from it, and don't forget to like it.
Brent Johnson is betting that the dollar is going to go up. But what is that bet exactly? It's going to go up against what? It's going up against other currencies, and they're all falling at different rates. Gold was 253 in 1999, and today it's hovering right around, it's above and below 2,500, mostly above, and that's a big psychological barrier, another even number. If a crisis hits now, you're going to see $10,000 gold easy. In fact, the more you study it, the more it seems absurd to be under $10,000 an ounce. There's so little of it compared to how many dollars exist. All those fiat currencies are falling compared to gold. Gold was 253, and now it's over 2,500. That means the gold didn't change. The dollar fell by 90% in 24 years.
Right.
I see that when the crisis hits, and people are seeking a safe haven, as they always do. Normally, about 98% of all the currency seeks treasuries as the safe haven.
Yeah.
And there's this 2% of all the nuts like me that go for gold and silver or cryptos, right?
Yeah, yeah.
Those are like the safe havens that are sort of outside the system. But we're at a level of debt to GDP, and then the dollar is under attack from the BRICS countries and basically every country in the world that is not the US. Is like, but it's going to, unless it's a big crisis that is like a crumbling of the financial system globally, it's going to take a long time. I mean, it's chipping away at the dollar. Then, several big inflations in Rome, to where they started out with pure gold and silver, and eventually they ended up with the silver coins were just copper with a little wash of silver over the, just like our coins that they're a sandwich. They're copper in the inside, and I think zinc and something else on the outside. I can't remember the mix. And John Law's France. I mean, France was broke. This guy that sort of dabbled in economics, but he was basically just a gambler, presented this thing that what you have is an insufficient currency supply. So you've got to be able to create currency. And it was great for a couple of years, and then the whole thing imploded. So yes, we keep on repeating this thing over and over and over. And I wish I could remember John Galbraith's quote, because it is the best quote on that.
Since 2008, the U.S. has been spending approximately 35% more than its annual income, a fiscal imbalance that raises serious concerns about the long-term stability of the dollar. Financial expert MikeMaloney emphasizes that this prolonged deficit spending, combined with a sharp economic downturn, highlights the potential vulnerabilities of the U.S. currency. The 2008 financial crisis, which saw the U.S. economy shrink by 4.3%, its steepest decline since World War II, adds weight to this concern. Maloney draws further parallels with the historical collapse of the Bretton Woods system. Under Bretton Woods, currencies were pegged to the U.S. dollar, convertible to gold at a fixed rate of $35 per ounce. However, the U.S. began running persistent trade deficits, and its gold reserves dwindled. The gold reserve ratio, which started at 40%, dropped to 8% before the system collapsed. This disconnection between the dollar and gold undermined confidence in the dollar and set the stage for unchecked government spending. Fiscal policies shifted dramatically after the U.S. abandoned the gold standard in 1971. Government deficit spending surged from an annual average of 3 to 5% to 20% during the 1970s and 1980s. This shift away from gold-backed currency allowed for greater flexibility in monetary policy, but fostered an era of excessive debt accumulation. Let's get back to the video.
Well, you know, this is a leftover from the Bretton Woods conferences, and we got to sort of run the world monetary system. The majority of the representatives at the Bretton Woods conference didn't want this system when they went there. They wanted a different system, and we ended up with the US dollar being the world reserve currency and getting to run the game. There's so many dollars. And then the Federal Reserve, until this century, the Federal Reserve was a lot more cautious and didn't create, Argentina was creating pesos willy-nilly and doing deficit spending with them, and then they had this raging inflation, and they defaulted on their debt a few times, and so nobody trusts the peso. So yes, they want dollars, because you can trust the dollar more. But the U.S. has the continental dollar went into a hyperinflation. The Confederate dollar hyperinflated to nothing. Robert gave me a Confederate dollar. Thank you, Robert. I think it was like $100 or something like that. And the greenback, when it was introduced, it also went into a very short-term hyperinflation. It lost two-thirds of its purchasing power during the Civil War. And then later on I can't remember what the act was called, but the Resumption Act or something like that. And they backed it once again fully with gold. But I don't see any politician that has any type of restraint when it comes to the spending that they want to do. And they promise us everything to get elected. And then they try to give us some of what they've promised. And it always, even with the Bretton Woods system, where there was no reserve ratio to gold that was specified, and it dropped from 40% down to around 8% before they had to end the Bretton Woods system. But even with that, our typical deficit spending, the government would spend 3 to 5% more than its income on the average every year. As soon as we ended that, it jumped up to 20% all through the 70s and 80s. Clinton got lucky, and there was the NASDAQ surplus boom. And actually, there weren't any surpluses. That is a lie. It's a hocus-pocus accounting.
Was it an accounting gimmick?
Yes, because if there was actually a surplus during the Clinton years, the debt would have gone down. So my definition of surplus and deficit is you download a chart, you download a bunch of numbers, and you look for a year where we had less debt than we had the previous year, and then you know that we had a surplus.
Right.
If we've got more debt, then this budget surplus deficit, all these numbers that they give you, is a lie. And it is a lie. We've never had a year where we owed less than the previous year, unless you go back to, from the Revolutionary War, we paid down the debt. And the last time the U.S. was debt-free was under Andrew Jackson. And then we had the Civil War. We borrowed a bunch, but gold still limits how much they can borrow. So we got to about, I think it was about a third of our GDP that we were able to borrow. And then after that, they paid it down, and we grow the economy. Just the private sector is what causes most of the recoveries. It's not the government that causes recoveries. It's the private sector growing the GDP faster than the politicians can steal it from us and spend it. And when they do that, the debt to GDP goes down, even though they're still borrowing and spending. So it went up to 20%, and now it's 35%. Ever since 2008, the average is about 35% more than our income that we spend every year. How long can that go on before people stop trusting the dollar and go to some other? I expect that Bitcoin, other cryptos, gold, silver are going to go to some pretty astronomical prices in the future.
As confidence in fiat currencies declines and fiscal instability persists, gold and silver are set to benefit. With increasing skepticism surrounding fiat money, assets like Bitcoin, cryptocurrencies, gold, and silver are anticipated to experience significant price hikes. Given the current global economic pressures, these trends suggest that gold and silver remain essential assets for investors seeking stability. What are your thoughts on the role of gold and silver in today's market? Share your views in the comments below. If you found this video informative, please give it a thumbs up, subscribe to our channel, and click the bell icon to receive updates. Thanks for watching.